We have that false dichotomy because when the facts change, the bears, well, they just changed the darn narrative. More like, we're either headed for a dire recession or the economy is so overheated that the Fed's going to deliberately cause a dire recession to cool things down. They can't imagine a middle ground, like you and I would think of, where we actually do thread the needle. So why bother to stay the course? I mean, after today, you have to say, what the heck is Cramer talking about? Well, I'm going to give you a couple big reasons. First, when it comes to the fight against inflation, we have already won some major battles. Oil's come down huge from its highs. Okay, maybe because Russia's flooding the world with crude in order to pay for its war. They're selling through India and China at lower prices. The longer the war lasts, the lower oil goes. Second, the real inflation hit from the war in Ukraine has to do with natural gas for Europe. But now the Ukrainians have made some major breakthroughs, and if they can win decisively, and they can, looks more and more like that each day, then the price of natural gas is going to fall because there's no reason for Russia to choke off the supply to Western Europe if there's a truce. In fact, by the way, natural gas prices have come down hard in the last few days. Third, it's important to recognize that the so-called embedded inflation that everybody's got you so scared about will only last until the labor market loosens up and we see the end of mass job hopping. I think we're already headed in that direction as we see more layoffs. You can't job hop when it's hard to find work. We're already seeing it in tech and finance. Other areas will follow. Fourth, there's a failure of imagination among the bears. They look at embedded inflation and can only think of one solution, taking the federal funds rates to heights not seen since the early 80s, when Paul Volcker engineered a horrific recession to tame inflation by taking rates to the high teens. I think Powell's made it very clear he will stop embedded inflation by any means necessary. I like that. But I don't believe we need the full early 80s treatment here. The whole idea of rates in the teens strikes me as totally out of touch with reality for everybody except for the people who have a microphone. Finally, we're not looking at a collapsing earnings scenario, not after outputs like Starbucks, where I am now just gave us a staggeringly positive outlook this very afternoon. Buy, buy, buy! Buy, buy, buy! Buy, buy, buy! Look, I'm not saying you need to buy something here yet. We only bought one stock for the charitable trust today, one, despite this giant decline, and warned people that we don't want to be aggressive ahead of Thursday's club meeting at noon. We know a bounce may not directly be in the offing. We just had a huge run. We'll assess the damage in a deeper dive then. But the bottom line, we sure weren't selling. We didn't join the throng. You know why? Because we think the throng will ultimately be wrong.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.